Right, hi all. Another webinar for you today. This time on all things Australia. I am delighted to be joined by Darien Bradshaw. Darien actually used to be my old boss, so always good to catch up with him anyway. But Darien is one of my go-to experts in terms of needing anything Australian related. He is based in Singapore, works for JLL. But Darien, appreciate your time. Thanks for joining.
Well, it's a pleasure to be here, Ludo. Thanks for inviting me.
So today, plan of action is I'm going to fire some questions off at you, just about the market in general, no project specific stuff, but to get your take on what's happening on the Aussie market, and just give our viewers a bit of an overview and snapshot in terms of how they can access the Australian market, and where's potentially good to be parking some money there. So, without wasting any more time, trends in the current Australian property market. What are we seeing?
Yes, so overall, the latest numbers which have come out from one of the major research houses in Australia is that every major capital city is experiencing positive growth for the last 2 months, which is fantastic news. And I think the national average is about on an annual basis, is about just under 4%, with obviously some cities at much higher rates than others. But the general consensus is that it's a positive market. Interest rates have just come down for the third time, so the cash rate is now sitting, I think, at 3.6%, which is good news because borrowers' costs are reducing. So we're seeing an influx of investors into the market, and some very positive trends which are coming out. The mortgage lenders are super busy. Auction activity, which is the major mechanism for second-hand sales in the Australian market, clearance rates are up significantly at 70%, which is a very strong indicator of price growth acceleration. Rents across the board. If you've got a rental property, if we're dealing with a lot of overseas buyers. The rental market is very strong. Vacancies tend to be between 1% and 3% in all the major capital cities. So overall, the consensus is pretty positive.
Vacancies are good. I remember I saw some figures that one of your colleagues sent over, but it seems to be vacancy rates are super low, and something like Perth had less than 1%.
Yeah, that's correct. Obviously, the lower the supply. Look, the big thing in Australia at the moment is there's an imbalance between demand and supply.
Hmm.
The Australian government, through planning at a federal level, has done a very poor job, and then state by state as well, in terms of creating new supply to meet the amount of population growth. Cities like Sydney and Melbourne and Perth, like Perth had over 90,000 people from overseas move there in the last 12 months. And I think in terms of housing starts, I mean, it's less than 1,500 or something. So,
Wow.
and then, if you look at Sydney and Melbourne, where the population is, say, 6 million, they've been getting between 100 and 120,000 new immigrants come into the country in the last 12 months. So, and housing stock is definitely less than 5,000 in each of those cities. So across the board, the issue is supply is very low versus demand, and once you start looking at things like university education and being near the city or nodes of employment, it becomes even more of a chronic problem.
No, I bet. So in terms of that, if we move on then in terms of cities, obviously Australia, a big place. In terms of the cities that are experiencing the most growth, what are the standout performers?
Yeah, so the latest figures that I'm looking at, it's very simple. Brisbane and Perth are well ahead of the pack in terms of the cities that overseas buyers tend to be interested in. So Brisbane and Perth have really been experiencing very high population growth, limited supply, which we were just talking about a moment ago. So they've been experiencing double-digit growth in terms of capital gain values, both for houses and apartments. And then if we sort of go through the list, really the only other couple of cities that we've experienced strong demand from overseas are Sydney and Melbourne. Sydney is still sitting at about 5% growth over the last 12 months. Melbourne, which has been the worst performing city in Australia for various reasons, which mainly relate to economic situations as an overhang from COVID. And despite the fact it's got very high population growth, is still in positive territory, but has been in negative territory for most of the last 5 years. So investors domestically are starting to look very heavily at Melbourne, and all the news headlines in Australia are about Melbourne because the long-term averages for all the major capital cities are 7% growth. Melbourne's been well below that. So if you were sitting here thinking about where the best growth might be with obviously the rates coming down in terms of interest rates, Melbourne seems to be the one that everyone is talking about at the moment.
Okay, interesting. And so I suppose that moves us on quite nicely in terms of the interest rates. What direct impact are they going to have on the property market? I mean, obviously, we could look at it from the point of interest rates drop. Are we going to see sort of that difference that buyers suddenly have in terms of the money that they can afford? Is that going to go straight back onto the value of the properties, or do you see there going to be some divide in that space and it's going to, values are going to grow more off the back of it? Are they going to drop? How are you seeing that play out?
Yeah, look, I mean, being based in Singapore, if you're refinancing here at the moment, you can get an interest rate of 1.9%. I mean, that's
Wow.
this week from one of the major banks here. So
It's like
that's
free money.
extremely, yeah, it's very low. And the cash rate in Australia has now gone down for the third time this year. So it's sitting at 3.6%. So then the banks need to make a margin on top of that. The good news is the major banks like ANZ, NAB, Commonwealth Bank, Westpac have passed on the interest rate reductions. So that's really good news. But still, what it means is that the average person in Australia who's buying a home is still looking at a mortgage rate of 5.5 to 6%. Any rate reductions are good news because obviously it does increase people's ability to borrow more, and it also reduces their costs. The consensus is that there will be more rate cuts to come. The inflation, the Reserve Bank of Australia sets the rates in Australia, and the inflation is within the parameters of 2 to 3%, which is what they like. Unemployment seems, employment is if you want to get a job in Australia, you've got a very good chance of securing one. Unemployment rates are pretty low. But despite all that, because of all the uncertainty that we hear about in the news, obviously revolving around the US and tariffs and all the sorts of stuff that we don't want to talk about on a property webinar. That uncertainty, though, will probably filter down, despite the fact the Australian economy is pretty strong, to two or three more reductions. Each of the banks is thinking along those lines in Australia at the moment. So good news, very good news for investors, very good news for homeowners, and overall, in terms of the economy, the indications are it's all pretty positive.
So I suppose that was you covered a bit of my next question in terms of the influence of the Australian economy on the property market. Would you say at the moment then we are in a buyer's market or seller's market in Australia?
So I think the first thing is if I look at the news headlines over the last few weeks, some of the ones which stand out for me is interest rate reductions tend to cause major increases in prices. If we look back historically, and I've shared a chart with you, which you'll probably add into the webinar, if we look back in time over the last 30, 40 years, every time there has been interest rate decreases, we've seen price increases across the board. But I think it's really important at this point just to point out that it's similar to Asia, where you've got a whole lot of different economies like Hong Kong and Singapore, we know are very different to KL, Beijing, Shanghai, and Bangkok. And if we looked at each of those Asian markets at the moment, they're at different stages of the property cycle. Australia is exactly the same. You've got you've got economies like Queensland and Western Australia, where Perth and Brisbane are. They're at very different stages of their property cycles than, for example, Sydney and Melbourne. So the most important thing is you can't talk about the Australian property market in its totality when you're talking about price movements. They all are working at different rates. But the general consensus is wherever you see interest rate decreases, you see price increases. And as I mentioned at the beginning of the podcast, each of the major capital cities for 2 months now, obviously with anticipation of more rate cuts to come, are in positive territory. So rate cuts are very good. High unemployment, strong wage growth, high inflation, fast population growth, all these things which can infect buying patterns are under control within the Australian economy right now. So I think generally speaking, people are in a good place in Australia right now, as is the economy.
And I suppose then from an international buyer's point of view, which is where you focus and specialize, where are you seeing the majority of those buyers focusing on in terms of cities? Is there a specific standout, or is it still, fairly
Yeah, there is. Yeah, there definitely is, Ludo. So, specifically, say Hong Kong and Singapore, most of the buying activity for a long period of time has been into Melbourne and Sydney. And the thing with especially from Hong Kong, Lower North Shore, etc., there is a lot of you go to cafes and you're hearing people speaking in Cantonese, but it's all about education.
Mm.
Um, the East Coast cities have done an incredible job in terms of luring overseas students, and that's really so. If you're looking at parents who perhaps studied in Melbourne or Sydney 30 years ago, then when they have their children, the two main places or three main places that parents probably want to send their kids are the UK, Australia, and I guess to a lesser extent the US. So a lot of the buying activity we see as a result, especially because there's a magnetism around that education story, is Sydney and Melbourne. But the one difficulty that we have at the moment with Sydney is because prices doubled over the last 10 years. For a similar location, say in Melbourne, the prices might be double to three times. So the more premium you go, the more the price gap is between Melbourne and Sydney right now. So that just as a result is forcing more buyers to consider Melbourne. But in addition to that, the blinkers have definitely come off in terms of Brisbane and Perth because from an affordability perspective and university, there is some good universities. Those cities have been tracking very well, but the cost to get into that market, say versus Sydney, is probably a third. So
But
Melbourne and Sydney.
domestically,
Yeah,
as I
Melbourne and
understand
Sydney.
it, there's a lot of Australians moving up to the likes of Brisbane, etc., just because you can get a lot more for your money, and the quality of life up there is obviously going to be pretty high in terms of weather, lifestyle, all that sort of stuff. So, is that still a factor, or is that sort of slowing down a little bit?
It's definitely slowing down because a lot of that was driven by COVID.
Mm.
People, university students and people who were employed in Melbourne and Sydney went through that extended period on and off where they were no longer required to be in an office or go to university campuses. And during that period, there definitely was a lot of movement of people for that reason, and also from affordability angle, who then decided, after maybe renting a property, say in Southeast Queensland, where they say it's beautiful one day, perfect the next. That was in the attitude. And if you look at the Gold Coast, I mean, the Gold Coast prices have, again, it depends exactly where on the Gold Coast, but where you might have been able to buy a $1.5 million beautiful 2 or 3 bedroom apartment overlooking the water. The new projects, 5 to 10 million every day of the week, we're hearing about, and there's record prices happening all the time. So population growth in Southeast Queensland is super strong. And then in addition to that, in Brisbane, you've also got a lot of money being spent by the government on infrastructure, and some of that is related to 2032 Brisbane Olympics.
Interesting.
So Queensland has definitely had very strong price growth, and from an overseas perspective, buyers investors and expats are seeing that. So there is a lot of buying activity in Southeast Queensland, which maybe wasn't there 10 years ago.